This week we called a Russell rotation, record low sentiment, and NVDA selling off after earnings. Here is what actually happened. Kevin Warsh was sworn in as the new Federal Reserve Chair on Friday. Same day, consumer confidence hit its lowest reading since 1952. Inflation expectations sitting at 4.8%, and the S&P 500 closed the week higher anyway. That gap between how consumers feel and where markets are is the story of this week in full. Russell 2000 led the US indices for a fourth straight session. Small caps outperformed large caps every single day. The Nasdaq digested the post-earnings move, but held above support. 5 calls. Here is the score. First, NVDA. We flagged Day 2 digestion after earnings. The level to hold was 215. NVDA fell to 214.86 intraday and closed at 215.21. Held by a thread. No clean bounce, but no breakdown either. Partial, second, volatility risk. We said the market looked complacent and that a headline could land without warning. Friday's consumer sentiment shock sent the volatility index to 17.39 intraday before settling back. Those who sized their positions correctly navigated it. Hit. Third, the Russell rotation. 3 sessions of small-cap outperformance pointed to genuine rotation, not a one-day event. Friday was the 4th day running. Small caps beat the S&P by nearly double. Hit. Fourth, the base case scenario for Friday was choppy consolidation at 45% probability. The S&P ranged in a 43-point band and closed mid-range. Exactly that. Hit. Fifth, gold. We said no short until 4,480 breaks on a daily close. Gold tested 4,488 intraday and closed at 4,510. Discipline was rewarded. Hit. The one honest miss, options expiry positioning. We expected downward gravitational pull on the index. Buyers overwhelmed it into the close. The market refused to obey the structural setup, which tells you someone with real conviction was accumulating. 4 hits, 1 partial, 1 miss. That is the week. Running overall accuracy sits at 76.2%. Long calls tracking at 77. Short calls at 57. That gap between long and short accuracy is not a coincidence. When $852 billion in passive flows is structurally supporting equity prices, shorts face a wall that sentiment surveys cannot explain. 4 trading days next week. Monday is closed, US Memorial Day, UK bank holiday. Tuesday opens with consumer confidence. After Friday's historic sentiment collapse, that print moves markets. Thursday is the fulcrum. Inflation data at 8:30 in the morning, then the new Fed chair's first real policy test. Scenario split for the week, 30% bull, the rotation continues and extends. 40% sideways, no conviction until Thursday. 20% correction, sentiment finally catches the market. 10% tail risk from Iran or a geopolitical shock over the long weekend. The data does the talking. Every call this week traced back to a number, a level, a flow. See you Tuesday. This is analysis, not financial advice. Always manage your risk.